Howdy, friends. Corey Moser with your mortgage and economic update for Friday, October 17th. So we're finally there. The 10-year Treasury yield has been flirting with the 4% number here for this week. And in fact, yesterday and again today, it actually broke through and dropped below 4% for the 10-year yield. That's actually good news for mortgage rates, which kind of opens the door and suggests that we might even see mortgage rates drop. And speculation is potentially into the mid 5% range before the end of the year. Now, keep in mind the government shutdown is still in effect, so a lot of the economic data has still not been released. So the Federal Reserve is flying blind and depends on a lot of those statistics to help make decisions on whether they will cut rates in the future. They are leaning towards that, and we may see and can expect a couple of rate drops before the end of the year. Although those do not directly affect mortgage rates, pricing generally builds in, and seeing that 10-year Treasury break through that psychological point of 4%, that's going to help us, and we may see rates drop. So keep that in mind. The national average right now, 6.27%. So that's down from where it was at last week. And we're still moving in the right direction. So if you've been waiting for those rates to come down, this may be the point to be considering a home purchase or a refinance. And if we get lower at some point, you can always take advantage of a refinance in the future. But take advantage of those rates while they're low, because sometimes they don't last and we don't know how long that downward pressure on the yield will be there. Thanks again, and we'll talk to you soon. Have a great weekend.